Hi there, Serial Trader here. Let's do a checkup on the major US indices and starting with SPX. So last week I didn't check in on this as there's really nothing remarkable to point out. We're slowly just grinding higher still. We have this cluster of targets that I put out there in the last video, so we're just starting to touch some of the lower end of the targets here, and certainly wouldn't be surprised on some further near-term strength, although definitely need to emphasize at this point things can certainly reverse sharply basically at any point when you're this extended to the upside. But that being said, it does still look likely on a short-term basis that we go a little higher. Everyone's got their eyes on this level, 2818, and also these two levels, 2815. Let's call it 2815. So likely these levels get tested or taken out. I would suspect we're kind of in a situation where we'll have a false upside breakout. We pop a little bit above it and then reverse sharply. That's just my feelings about it. But I also see this support line, or I should say trend line that used to be support, act as resistance on the retest over here after we broke it. Wouldn't be surprised to come up and retest that once again and then fail there. Obviously, everything here will be changed if we actually made a new all-time high above 29.40.91, and I'm certainly not anticipating that at this point. But can't rule out certainly taking out these, or at least marginally taking out these highs here, 28.15, and much closer to that. We're almost there now, the 2800 level. And okay, you can see that we're just about overbought on the daily RSI. We're at 69, so 70 plus is considered overbought on the daily. If we go shorter term here on the hourly chart, definitely starting to see some divergences. So you can see we're making higher highs, but the MACD moving averages so far making lower highs. And same with hourly RSI. Higher highs in price, lower highs in RSI. So that's certainly a condition you would look for when a move is about to end and change direction. Although, you can diverge and then all of a sudden it can become overbought again on a upward move. So it's not really a timing tool, but it's just a condition that needs to be present when you're looking for a potential market turn here. Now, just looking at the subdivisions. So after we came out of this wave forward triangle, we were expecting a 5-wave move. So we have this 1 up, 2 down. I like this being the end of 3 right here. Certainly count this as a 4, and now we're coming up in the final 5th wave. So wave 5 of 5 of C of 2 in this expanded flat scenario. So this little wave that we may have just started here to the upside, we need a 1, 2, 3, 4, 5. So certainly room as far as getting the right subdivisions here to go a little higher and go deeper into these fib targets and also structural targets that I've placed there on the last update. And then also this trend line coming into play here, roughly estimating just based on the angle we're going at, maybe around that 2850 level or so. Now, it doesn't have to go there, but certainly some things are coming into play there. So that's a key level to look for if we do get there for a reversal. And I continue to favor the expanded flat scenario, although as I pointed out previously, there's certainly other potential scenarios such as this just being a 3-wave decline. This will be our first 5-wave advance off the bottom, then we need a 3-wave decline and then continuation of the upside. But in either interpretation, or in any of the interpretations I can come up with, we have a very mature 5-wave advance nearing completion. You'll require some sort of downtrend to counteract it. So things tend to seek balance. Just like here, we had a 5-wave decline. We had our 3-wave advance. Now we have a 5-wave advance. We need at least a 3-wave decline, or if it is the expanded flat scenario where we have this ABC 335, then it won't just be a 3-wave decline. It'll be a impulsive decline, 5-wave decline down to new lows. But at this point, getting way ahead of ourselves there. first thing to look for would be some sort of reversal, and it's just not there yet. So on the very near term, a little bit higher still seems warranted. Okay, now we'll go to the thinkorswim candlestick chart, and I'll look at this T line here. So this 8-period EMA, the T line, until we actually get a close below the T line, and ideally a candlestick sell signal, and then a close below the T line. There's no real reversal as far as the candlestick signals go. And you can see we've been in this overbought condition and just stayed overbought. So this is just grinding higher still, at least for now. We are above the 200-day moving average. And basically everything is currently pointing up. So no signs of reversal using this method. On the weekly chart, have a look here. So this is pretty remarkable. I think we have 9 green weeks in a row. Doesn't mean 9 higher weeks. This week was a slightly negative week on a closing basis, but just to have 9 green candles on the weekly chart in a row, you'd be pretty hard pressed to find that, even in, you know, the most bullish times of the previous bull market that may have ended up here. Even here, we had this melt up into January of 2018 there. And let's see, so starting from this little pullback low, let's see if I can get 9 weeks in a row green. 1, 2, no. 1, no. 1, 2, 3, 4, 5, 6, no. 1, 2, 3, no. 1, no. 1, 2, 3, 4, no. So that was an extremely bullish time, okay, and nowhere near 9 green weeks in a row. So the fact that we've had 9 green weeks in a row, that is remarkable. I mean, I challenge you, go back and find it. I'm sure it exists somewhere, but you're hard-pressed to find it. So to not think that there's going to be some sort of setback here, even just a corrective one very soon, would be a fairly naive notion. We are getting into the overbought condition here on this weekly oscillator. I'll just point that out. And yeah, just on this chart, definitely looking for something more compelling before getting aggressively bearish. Got to see a sell signal on the close below that daily T line at a minimum. And you can see this daily T line, ever since our first setback there, it's really acted as good support. In fact, we have not closed below it ever since January 3rd. That's the last time we closed below the daily T line. So that's pretty remarkable. All right, so we'll move on to Dow Jones Industrial Average. Now on the Dow, very much the same picture. Still in the overbought condition here on the daily, and just staying overbought, still grinding higher. I believe the Dow already broke this December high. Let's see here. This high was 25,980.21. We went as high as 26,052.9. So we've broken the December high on the Dow already. Next level of interest on the Dow is that high at 26,277. So another 200 points or so above where we went on Friday, roughly speaking. And then obviously the Dow's all-time high comes into play at 26,951. Again, not expecting that to happen. Expecting this to kind of fall into trouble here, along with the S&P, make a lower high below the all-time high, and then reverse. But that's the next area of interest here on the Dow. So on the weekly chart, we're getting into the overbought condition here on the weekly chart. And the Dow, I think the Dow not only has 9 green weeks in a row, but it also has 9 weeks of higher closes. So the Dow is actually up on a weekly basis 9 weeks in a row. And again, I challenge you to go back on this weekly chart and find a condition, even in this bull market that we had, including that melt up into January of last year. I challenge you to find 9 higher weeks in a row on the Dow. It's it may not be unprecedented, but it's very, very unusual. So don't be getting confidently bullish up here, is what I'm getting at. Even if you want to be bullish and you think that this is our first 5 waves up to start a new bull wave, which it certainly could be, the opportunity will be on the next corrective decline if that's the case, not here. Just a word of caution there. All right. So yeah, Dow, similar condition, the S&P. NASDAQ composite. Okay, so the NASDAQ has now finally gotten above its 200-day simple moving average. You can see there's a little bit of a battle there, but now we've cleanly gotten above it and closed above it. We also got above the December high in the NASDAQ composite, so that came into play at 74.86.51. Got as high as 75.27.54, and that next level of interest will be at 75.72.93. So not too far away. Less than 100 points away on the NASDAQ composite. And you can see we're just in the overbought condition and staying overbought for a considerable period of time here. We can see we started getting overbought here way back in this move, like halfway up, and just staying there. So overbought does not mean sell, oversold does not mean buy. It's just a condition that you're in. Now when you start getting divergences, that's worth paying attention to, but again, not really there yet. Certainly on a daily basis, no divergences there. Okay, so looking on the NASDAQ, we would want to see a candlestick sell signal and a close below that T line. And we just have not gotten that yet. So certainly no reason to try and be aggressively short. You could start kind of scaling in small pieces into a short and giving yourself plenty of time. If you want to buy puts, go 3 months out or more at this point. Really give yourself some room for this to play out. Or you can just wait for that signal. Or, this isn't a bad idea either. Let it find its top. Let it do its first, sharp wave down. Let it have a corrective wave up that makes a lower high. And then set that level as your stop or your mental stop, depending how you play it. And then at least you have a, clearly defined trade, with relatively small risk and potentially large reward, right? So that's the way to do it too. Instead of trying to scale into the top or pick the top, let the top pick itself. Wait for that first move down. Yes, I know you want to catch the first move down, so do I. But for, confidence purposes, let the first move down play out. Let it make a lower high. 3-wave corrective advance would be ideal. And then that's the trade setup, right? But it just hasn't materialized yet. It's not there. It's just still a waiting game. Most of this game is just waiting for the thing to set up and not being impatient. But, I've been wanting to get aggressively short on this thing since, since January. And look how long it's just continually ground higher. So, big part of this game is just waiting it out. Waiting for the opportunity. Okay, let's go to the weekly chart on the NASDAQ. And I believe the NASDAQ also went up 9 weeks in a row, even on a closing basis. Yes, it did. And again, so we're in the overbought condition on the NASDAQ on the weekly. So that's worth noting. And so going back, again, I challenge you on the NASDAQ composite. Go find 9 higher weeks in a row. 9 green weeks and 9 higher weeks on a closing basis in a row. You'd be hard-pressed to do so, even in, the extraordinary bullish run that this had up until that August peak of 2018, okay? Now, if you go back far enough, you'll probably find it, but I'm just saying this is a very unusual market condition we find ourselves in. Okay, and in my opinion, it kind of screams a bear market rally. I like the psychology of it, scare all the bears away, make them give up, suck all the bulls in, get everyone nice and confident. Usually turns happen when sentiment gets to an extreme. So down here, the bears were just beating their drums hard, bulls were terrified, and that was a wonderful buying opportunity at the end of December there, or near the end of December. And now I believe we've kind of reversed the tables and we're in kind of the opposite situation. But again, let the top pick itself. Don't get too aggressive here. Okay, so that's the NASDAQ. Now on the VIX. VIX has collapsed. And VIX definitely breaking at least a portion of its uptrend. But truly, VIX is still technically in an uptrend as long as we stay above 1017. Okay. And right now we're at 1351. Went as low as Oh, we closed right in the low of the day, actually, 1351. So VIX in the oversold condition, staying oversold, breaking a lot of these previous support levels we had. But I expect that low in VIX to hold, so around 10. And really, in my opinion, VIX is ridiculously low at this point, considering how volatile the market has been not that long ago. So, again, if you want to buy some VIX calls or go long VIX futures or buy a VIX product like a ETN like TVIX or something, just give yourself some breathing room, give yourself some time, and don't go too big on the initial entry. That's my words on that one. Okay. Oh, that's good for VIX. Now we'll look at the VIX VVIX tool, and still in a neutral condition there. We're still below the red moving average on VVIX, still above the blue moving average on SPX. There's really no major divergences here between VIX or VVIX. So still nothing. Still no sell signal here, but continue to watch. All right. That should be good for now. Let's see if we get something next week, or if we just continue grinding higher into those targets, that target cluster that I have laid out. All right. Serial Trader signing off.